Good morning, everyone. Today is July the 11th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band, and we are sitting here looking at SPY breaking out, right? 100% motion here. What's the high? Now, let's talk about how trading has been. If we've been paying attention, riding the intraday wave has been fairly straightforward. So here's what I mean. 556 floor. We know that below there we start running into trouble. We're looking at 2 to 3 candles to the left. Yesterday, it moved above the high of the prior day, and it literally never looked back, right? So today, what are we going to look at? Well, we're going to look at the high of the prior day. If we break out above 561.64, we'll likely head to 565. If we do not, and we sit inside of range and inside of value, meaning the areas of the prior day, we are very likely to come to the 50% retracement of this candlestick, which sits at about 558. Okay? At which point, my suspicion is that the buyers will try to buy there, right? So let me go to a 30-minute candlestick formation and see if I can see where it is that we broke away. Oh, yeah. So here it is, early morning, opening range, right? Here is the 10 o'clock candle that makes a high. A lot of times, we look at the range between 9:30 and 10:30, and that becomes the initial balance, the area that a lot of traders say, okay, we could stay in here, but if we don't stay in here, we're going to run in the direction of the break. That's exactly what happens. Again, it's the first hour of trading. If we're patient and we wait, this breakaway formation on the 30-minute shows us a very strong upward moving average and a very strong MACD. So we buy. Now, here we are coming into the morning here. Range. Why are we in a range? Well, we're waiting on the CPI, right? The CPI is going to give us a range break. I would say don't get in front of it. The TLT is moving up this morning. The dollar is moving down this morning. That suggests that CPI will be soft, and more data that says they can reduce interest rates is going to come as the forefront of that, and that's going to push prices to the upside. All right, let's take a look at the cues. Oh, sorry. Again, pullback. 557 or the break above 561 to give us upward action. Cues. Monster motion up at the 502 area, not at the top of its range, but I'm going to replicate this anyway because I suspect it's going to move. Whoops. All right, let's try that again. I do suspect it moves. Where's the next place to the upside? That is going to give us, I'm going to take this one. That was the 50% pullback or the breach above the high of the prior day's candlestick. Now, the high of prior day's candlestick is where we're battling right now. So the breakaway into the next edge is going to be the breach above yesterday's high, which is 503.50. Now, if you just barrel on in there, you might get shaken out. So you want to try small size if you're chasing the higher range out, because easily that goes to 510, 512. All right. Could it do it there? Yeah, sure. Sure, it could go there and chase it out, but collapse into a smaller time frame and watch the breakout. Let me show you what collapse into a smaller time frame and take the breakout looks like. We're going to choose the high of this day, which was 500 on the nose. Isn't that interesting? Let's go to the 30-minute chart. 2 days ago, take a look. There's 500. Happens at the open, breaks out. This is what I mean about chasing a formation. See how it breaks out and immediately sells off? It sells off almost $2, right? Almost $2. A lot of times we can't hold that kind of shake, right? Especially if we buy an option. It is the bounce out and the pullback that holds the higher low, recaptures the moving average, and then Bob's your uncle. And then here, what you do is you go, well, I could be wrong, so I'm getting in at 499. Now 498.20 is going to be my stop. That's how you work with that. Overnight, really quiet because of the CPI coming ahead. And so that's what we're going to pay attention to. Let it break to the north, pull back shallow, and we could run another day, right? Thursdays and Fridays, fairly bullish in this kind of environment, particularly in July, which is a very positive month, statistically speaking. All right, so here's the ES. We broke way out of this box yesterday, 56.65. And where did we end up on our high? 56.90.50. That's going to be the number to watch, that we break out and over, or the pullback into the 50% marker, which is that 56.65 area. 50% marker of this candlestick, anywhere from 56.65 all the way down to, I don't know, 56.59. Let's go see where that number actually is. It is. Isn't this interesting? It's actually here at 56.46, and that breaks out. We have a high of the, is that 9:30? Yeah, we have a high 9:30 candlestick formation. So really, the break above here, first pullback, higher low, recaptures, so 56.50, 56.49, something like that. Okay, what are we waiting for? You know, we're waiting for the CPI. And so could the fade come at this congestion zone, 56.40, 56.49, heavy congestion here. What's the high here? 56.45. Could easily. I'm looking for this area to go long. Anne-Marie, you're always going long because the charts are going long. And so rather than get my face punched, I'm going to wait for the trade that tells me it's doing well. And if I want to take a counter trend trade, my chart better be very far away from my moving average for me to do that. And I'm going to cut it off as soon as it gets to that moving average. Volatility is very low as measured on the week, right? Intraday volatility is bigger, but real volatility that says, holy cow, crazy things are happening, is just not there. And so that means we're going to buy the dip until that volatility regime begins to change. And it's not so far. Here we are, NQ, breaking out. Where did we go? What's the high here? 20,916. That's going to be the number to watch. If we get above 20,916, what's going to happen? It's going to shove all the shorts who are desperately waiting to short the market. It's going to shove all the shorts out of the way. That means there's going to be a new slurry of buying. 50% area, round and about, I don't know, 21,160 in this zone. They all want to test this 21,000. It could keep running. My thought is we should take a breath. We're very far away from it, this average here. And, you know, we just keep piling and piling and piling and piling. And so we got to watch for this formation, right? Pullbacks, 20,783 or 20,690. That's what I'm looking for a pullback. If it loses its edge, folks, it's very likely to come all the way down to 219. I thought we would break this area here and here at 20,594, but we didn't. Momentum is still very aggressively long. Let's take a look at the YM. This one is the redheaded stepchild. Forgive me for those of you that are redheaded stepchildren. You know, that's just figuratively. I have a redheaded granddaughter that I absolutely adore. So that kid is hilarious. Anyways, here we are, gapping up 2 days. I don't know what's going on with this chart. It is so wonky. But I'm still of the mind that bounces are going to fade. Now, the question is where? Yesterday, full disclosure, I did try to find the short area here on the bounce fade, but I got in too early and it stopped me out. And so I had to recalibrate and reset. And I actually ended up playing the NQ because the YM annoyed me so much. So right now, that's what we're looking for. We're looking for a fade back into this very choppy zone and another bounce on the horizon. Momentum is up, trend is up. We're just very extended, and this chart is really not showing real strength. Where's the area that we could have some trouble? I'm going to say Oh, for goodness sakes. If we're going to draw a line and we're holding this edge, I say we're kind of here, right? That's kind of the wedge break. And I suspect we have some compression here. So I'm looking for a short. I'm not going to deny. But I'd love to see a big bounce, collapse. And so I'm going to be watching the opening range here to see how I can treat it. All right, last thing, because I've been rambling on and my throat cannot handle this. Whoops, wrong. CL1. Still in the box. Look at that. Pulling back. Look at this savage bounce off of this zone. This was a buy point, and I saw it, and wouldn't you know, I missed it. For my regular trading in my personal accounts, I do like trading the CL. I'm trying not to fracture my mind too much, simply because it is a bowl of cottage cheese in the present time, due to this bug I have. But I suspect we're in a little bit of a congestion stage. Whatever the EIA gives us, sharp fade, we're going to buy it. Sharp bounce, we're going to fade it. That's what I'm looking for. So I'm looking for a short up around 84.60 to 84.30. I'm going to look for a long around 80. All right, don't have time to talk about gold today. I'll see you on the platforms.